Multi-company reporting and eliminations. Acumatica allows you to centrally manage complex corporate structures. Intercompany transactions are automatically reflected in financial reports, including eliminations. As a result, you can easily add new companies and streamline auditing across your portfolio. Corporate structures can be established to accommodate your financial and management reporting requirements. The products company is configured to automatically create due to, due from entries to keep individual company ledgers in balance when transactions include multiple companies. The services company only balances at the company level. Transactions between branches do not create balancing entries. This structure is ideal for management reporting. Transaction 3 is an example of an arm's length transaction between companies. This can have a paper trail with AR and AP documents as well as markup pricing. Acumatica supports different types of transactions between related companies. The buy-sell relationship allows companies to transact as if they were customers and vendors with specific pricing and a complete audit trail. Automated balancing options support manual GL entries, centralized bill payment, and GL allocations. Buy-sell relationships between international related entities are completely automated. Due to, due from entries require an end-of-period balancing process. Automated balancing is configured so the system creates due to, due from entries when a single transaction spans multiple companies. This works with GL allocations to distribute costs across companies. In this example, I allocate supply expenses among companies based on headcount. I use a statistical ledger to track the headcount. I can also allocate based on a fixed percentage or other weighted amount. Generally, at the end of every financial period, the system automatically allocates expenses, although I can run it at any time. The allocation creates a single batch with different companies. When releasing this transaction, the system creates due to, due from entries, so the company-specific ledgers remain in balance. Here, a bill I received from a vendor itemized charges between two companies on the same bill. When I release the transaction, the system automatically creates due to, due from entries because the wholesale company is paying the vendor and needs to be reimbursed by the retail company. Due to and due from entries are included on the balance sheet. The totals match on the consolidated report. When I drill into specific companies, I can see the balance details. If needed, I can add additional accounts to track balances amongst all companies. Acumatica allows entities to buy and sell directly from one another through a typical customer-vendor relationship. After creating the AR invoice, the system automatically creates an AP bill and links them. The process also works with physical goods. I'll demonstrate this along with eliminations. Acumatica automates eliminations through financial reporting. To begin, I process a transaction that should be eliminated from financial consolidated reports. When I release the transaction, the system automatically creates an entry in the elimination reporting ledger. The elimination entry can be automatically released, or I can do it manually here. This profit and loss report shows a consolidated view, which excludes related company sales. This is easy to set up and works by hiding related sales and expense accounts. When I open a specific company, the elimination accounts appear. This report shows results that include the elimination ledger. This requires setting up an automated eliminations process, but allows me to see everything on a single page and supports partial ownership scenarios. Eliminations also work when companies buy and sell inventory. This process starts with a purchase order that is copied to a sales order, shipped, received, and billed. I'll fast forward while I complete the transaction. All steps are automated, but I will process items manually for educational purposes. First, I create and approve a purchase order in the purchasing company. Next, I generate intercompany sales orders. In the selling company, I open the sales order, ship goods, and prepare and release the invoice. The The system creates a purchase receipt. Back in the purchasing company, I receive the goods by releasing the purchase receipt. Next, I prepare the AP bill using the Generate Intercompany document screen. This automatically links the AP bill to the AR invoice. Behind the scenes, an automation schedule automatically processes the eliminations. I can review and release the GL entries, or the system can release them automatically. When complete, I review the profit and loss reports to see both the impact on the consolidated report and the company-specific reports. Since all transactions are in the same tenant, I can drill down to the details of the transaction that I just created. In this example, I broke out my product sales by sub-account so I can hone in on a single transaction. Acumatica covers multi-entity reporting, including eliminations and consolidations. In one of my demo scenarios, I use column sets to display companies. This is ideal when I have a limited number of entities and a single base currency. I could use column sets to display ledgers. This is ideal when I have limited entities with different base currencies and need to drill into individual transactions. And I can use unit sets to overlay any report. Unit sets are convenient when reporting on multiple entities in an environment where company structures frequently change, like the buying and selling of entities. Elimination reporting supports manual GL entries, automated due to and due from, and buy-sell relationships. In this video, I used Option 2, an elimination ledger, to demonstrate the last two examples. Within Acumatica's sales demo data, I configured two types of reports. The 12-month rolling P&L report utilized printing groups to hide rows when a consolidated unit set was selected. The P&L by branch report utilized an additional column set to display the eliminations ledger. This ledger was automatically populated using automation techniques. Acumatica can consolidate financials across tenants as well. Utilize this when you have independent companies that require different software versions, different customizations, separate vendors and customers, and/or other separate configurations. Dashboards and inquiries can summarize information across companies regardless of company restrictions. Be careful when adding amounts so that you don't mix up the currencies. In this video, I demonstrated multiple entity eliminations and consolidated reporting inside a single Acumatica tenant. Related topics that were not covered include when to use instances, tenants, companies, and ledgers, a workaround to simulate due to, due from entries across international entities, and options to transfer funds between companies. For more information, visit our website or speak with an Acumatica partner.